All over again. What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, we've got a special Thursday edition. Why is it so special? Well, because it's just for the premium subs here on Zach's Live Trader. So I want to thank you guys so much for sticking through with us while we're growing, while we're evolving this thing, trying to figure out how to make it worth everybody's while, right? Trying to grow this thing, make it bigger, turn it into a community, make it awesome, all that stuff. So there's that. We're going to do a couple of things. First of all, I just got a question for a quick little VWAP on the Palo Alto Networks. So guys, all right, now we do this a lot in our Friday thing that we do, right? Where we fade the move in the underlying. And we may be setting up a scenario like that here. The bottom of this earnings gap is 133. I could definitely see a scenario where this sort of drifts intraday. Now, I'm not talking tomorrow. Tomorrow, I'm a dead man. Who cares, right? It's like at 3:15, at the close, I'm a dinosaur. I'm talking about right now. Right now, this might be setting up for a nice little fade to 133. A couple of ways to play this, guys. You could sell these 140s, and I'm talking about the ones that expire like tomorrow, right? Sell 140 calls. Perhaps the other thing is, but unless this rallies up here. So we do have the VWAP, which is this yellow line, right? Traded under the VWAP. Now it's kind of struggling at the VWAP. I think you're going to see people sell this off a little bit. So anyway, the other way I was saying is you can buy an out-of-the-money put here. Not too far out of the money, but maybe 135s. Again, short-term stuff. This could be a short-term trade, a day trade that you guys can make some money on. So let's go ahead and pull this up. Although remember, these aren't going to be real time, but I like to uncover these, especially for you guys, and of course, especially when I, didn't do so good on the initial PNW move that we were talking about. So this is what I'm saying. So these 140s, you could still put together a little short call spread out there if you wanted to, or just outright buying these 135s. And I'm talking about like now, like immediately, right? As for a short-term sort of day trade in the hopes that this thing fades a little bit of the move and just tests the top end of this gap. If it just gets down to 133. So that's what I'd be looking for, putting on one of those and hoping that this just trickles down to 133 and cashing in on it. That's it. Very short-term day trade kind of stuff. And the reason that I show you that is I put this in direct comparison to if you were just going to go short the stock. So let's say you decide, okay, I'm going to go short at 137.60, right? Now, let's say you put a 60-cent stop loss on that. That puts you up at 138.20 as your stop, which is above this sort of area here, right? Which is fine. But if that just kind of ticks up and hits it, boom, you're out, you're done, it's all over. Whereas buying that 135 put, you're still going to have the same 60 cents at risk, right? But if this unwinds, even if it ticks up before it unwinds, right, your risk is still clearly defined. But granted, your break even is way down, 134.40, right? So it's going to have to go further for you to make the money. But then the multiplicative, your return is just astronomical, though, because it's only going to cost you $60 to put on, whereas shorting a $137 stock, right? So you have to have what? For most of you guys, half of that in the account. So instead of 137, you only need 68.5, but 100 shares. So you're talking almost $7,000, or I could do it with $60. You see what I mean? So, and I don't know. There's no way. Whether or not it holds 135 is just pure speculation and honestly nonsense on my part. I don't know. You'll have to see what the market does if it comes down there. We are on the south side of the VWAP, but that doesn't mean anything either. Maybe these bids came in and they're gonna continue to rally this thing on up, right? So there you go. And yes, you could absolutely go ahead and sell puts down here too. You could sell down these 133s, or even if you guys want to, you could sell the 136. There's a ton of opportunities here, right? You could do the sort of post-earnings iron condor based on the range. You could totally do that of the day. But I think this thing is going to start to evaporate. I think it is. So keep that in mind, and we're going to look back at that towards the end of the session today, and then we'll definitely look at it tomorrow. All right, guys? Okay. Now, let's get back to the task at hand, which is not me taking my lumps on Palo Alto Networks, but rather looking at Broadcom. Why don't we check in our cores, actually, real quick? Yeah, these guys are within the range of yesterday. That's interesting. Okay. Broadcom. Okay. So, price consensus and EPS. Let me put this back to normal. Let's get this all normal. Price consensus EPS surprise chart here on Broadcom. I need my Epic pen. It's going to be legendary. And what do we got? So, as always, black line corresponds to the right y-axis, which is price. Little green arrows, earnings beats. Red arrows, earnings misses. And you'll notice here that there have been some glorious times over at Broadcom. The multicolored lines represent the evolution of our Zacks consensus over time. Have you ever seen a scale like this, where these guys were making, what, 2 and change in 2012? Then they were making over $4 in 2014, over $8 in 2015, over $10 in 2016. There's a reason why this stock has gone from 30 to 250, right? Or 240. There is a reason for this. And the reason is earnings, and that should make you feel good about this company and good about the Zacks rankiness too. Look at these estimates come in low and then just keep going higher. Come in low, keep going high. And I say low, that's not even low. That's great growth here from 2015 to 2016 to 2017 to the whole thing. In terms of charts, Zacks price consensus and EPS surprise charts, this is about as glorious as it gets, right? It's fantastic. That's a great chart. So, hats off to Broadcom on that one. But, I know you guys are going to say it, what the heck is it a Zacks rank number 3 hold for then? Okay? Yes, it is getting a lot out of the iPhone business. They're going to get a huge boost out of the iPhone 8. Big time shot in the arm there. Now, this is an off cycle for Apple and iPhones right now, so the actual results here are not going to get a boost from, what's happened this quarter. This is going to be about moving forward, and that's really where they are going to get a shot in the arm. And I do think that this is of course, well, with Apple, I don't want to get into the Apple discussion right now, but as far as should you buy Apple, should you not buy Apple, I would say that this stock is a great way to go if you want exposure to Apple and you don't want to buy Apple, right? I know that sounds like a goofy thing to say, but in some cases people only want, I just want the phone exposure in Apple and I don't want the other stuff, right? Some people. Anywho, Zacks rank number 3 hold, value style D, growth A, momentum B. They're going to report after the bell today. And guys, I'm telling you, I'm so tempted. I'm trying to get people together because I don't want to just do it myself, but I really, really want to do live earnings reaction videos like the night of. But I want to do it when all of these things are popping off, and then we could show you exactly what's happening in after hours and give you sort of live visceral reaction as I'm seeing it for the first time, and as a couple other analysts are seeing it for the first time. Some of our more colorful guys, I really want to get them on board, but I just can't. When I get back to Chicago, I'm going to try to shake some hands, kiss some babies, and make it happen. And I'll be back in Chicago next week if anybody's around the Chicago area. All right, so top 40% of our Zacks industry rank right now. Let's take a look at the sales and revs. This is kind of interesting. Current quarter, decent, 15.94. Next quarter, okay, 11.62. The current year number is 28.79. But next year sort of grinds to a very slow growth number of 5.6%. But if you look at the EPS side, current quarter, 41% growth. Look what I did again. I got it too fat. 41.55% for the current quarter. Next quarter, 26.92. Current year, 31.8. Next year, again, still slowing, 10.24. Now, maybe they're just not pricing in the glory of an iPhone cycle, or maybe they are now, and then they're not extending that the rest of the year. This is why it's a Zacks rank number 3 hold, because there's no activity. Nobody's going on a limb here, increasing or decreasing their earnings estimates. So the overall effect to our Zacks consensus estimate, it's been pretty stagnant. This is just now. How does this change? Even if nobody's doing new estimates, well, old estimates fall off, right? So we only look 90 days. So when old estimates fall off, it can have an effect on this. But $3, right? 301 to 302, 315 to 313, 1291 to 1289, not a big deal. 1420 to 1421. So that's why we don't have anything there. That's why we don't have anything on this upside either. And if you look at the earnings history, small beats, right? Small beats on the streets. Let's look into this revenue a little bit more here on Broadcom. And you can see decent revenue growth here. This quarter, next quarter. Well, this is this quarter, right? This quarter, next quarter, the quarter after that. And then, so it's not really going to slow until, I would say, what is this, Q2 of 2018? So that's looming, but I don't think that that's going to be anything negative that we've got to worry about right now, okay? I like to always check out the performance of Broadcom, or any stock for that matter, versus the industry. Okay. Oh, and funny stuff about some of these guys. So I had a 5 years. No, I want to go year to date. I was just looking at a research report that's got Broadcom as an outperform, as a market outperform, and I just tweeted out about it. I think it was Oppenheimer upgraded them to or has them at outperform. The stock's trading at 241, and their 12 to 18 month price target is 240. Huh? Doesn't make a lot of sense to me, but what are you going to do? Okay, so they have greatly outperformed the industry. Oh, wait a minute, that's the wrong industry. We don't want to look at the textile market. That was obviously our Lululemon analysis yesterday. Let's go ahead and change that to the sub-industry. There you go. That looks much better. They have still outperformed the rest of the semis market. Semis have done very well, though, up 23.1% year to date, while shares of Broadcom are up 33.9%. So definitely some positivity for Broadcom. Now let's look at what that positivity looks like. And it is a gap up here in December to push it through that consolidation period. This is really important to see in stocks. Oftentimes you get these quarter long or 2 quarter long or whatever it is periods of consolidation where you're just range bound, sort of bouncing around with nowhere to go, right? And a few telltale signs of that are stock going up and down around the moving average. Kurt, I'm on StockTwits. A lot of us Zax guys are on StockTwits. Anyway, chopping up and down around here. Got a horizontal sloped moving average. That's the other thing too, right? So when they're doing that, they're chopping around, that's when you need to have a lot of patience. And then finally they move, which is great. And in the case of Broadcom, when this thing moved, furious movement. And you saw these money flows really start to climb. So this is nice big volume accumulation. But these money flows started to tail off. Stock tailed off, so that's fine. And then now we're in another period where the money flows have rallied as the stock, or the money flows have increased while the stock has rallied, so that's good. 50-day moving average provided support on multiple occasions, so that's also a good thing here. But what's happened here recently, right? We got a couple of down days, having trouble getting up over this sort of 240 area here. And we've got 50-day all the way down at 226. So that's kind of a ways. So you got sort of 240 on the upside all the way down to 220s down there. Commodity channel index kind of rolling over, but one of my favorite continuation patterns on earth is the commodity channel index coming down to the zero line and then bouncing. That happens often when stocks are at or near their 52-week highs. It's a pattern I use a lot in Momentum Trader to great success, to be honest. So something to keep an eye on. Keep an eye on there. Okay. Let's take a look at what these options market makers have to tell us regarding Broadcom. So 236 now. So we're going to have to use this 235. Wait, how far past 236? 236.60. Okay. Just to make my math easier, I am going to use the 235s. And I don't know if you guys noticed, but it really doesn't matter if you use 235 or 237.50, or as long as it's close, it really doesn't matter. Because what you're giving up on the puts, you're taking in the calls, and it evens out. Okay, so 680 buy, 620, beautiful. That's $6. Price it at the money call, at the money put, 450 buy, 490. We're gonna call that 470 all day. 1070 divided by 235. You're looking for a 4.5% move on earnings. Now at the surface, that doesn't sound like a lot, but let's go ahead and pull up our consolidated surprise. And if you notice here, 3%, 6%, -1, 5, 6, 9. It really hasn't, it's been a while. July 2015 is the last time you had a big move in shares of Broadcom. Okay. And dating back to before it was Broadcom, right? When it was AVGO. So, recently hasn't been a ton of volatility. Now, maybe that means that it breaks the mold this time, right? And that could be the case. Where's the VIX today? See, this is the other thing too. When you have a VIX at 10, just overall the volatility in these is going to get sucked out, right? Because if the overall market volatility just isn't there, then you're not going to have that in individual names. back to the bar chart. Okay, so that consolidated surprise sheet that I have here tells me immediate moves, okay? But what it doesn't tell me is sort of the delayed reaction to earnings, right? So it has a report, maybe doesn't move right away, but then it tends to move. Report, choppy. Report, waits a little bit, then moves. Choppy, choppy, choppy. Extended move, extended move. Okay? So that's what we've got here, right? Situation where recently we've had some nice extended moves, but they don't happen right away. Okay? So if I am on the long side, or even on the short side, either way here, guys, I think we got to let this post-earnings drift take place. So this is not going to be one of those situations where I give you a 2-week trade. We got to go out to July and really allow this thing to go ahead and take its pace. I'll give you a shorter one too, because I know there's a lot of you guys like the shorter ones. So that's fine. I got time. We'll go ahead and do this right. But first we're going to, I love how my Steam stuff pops up while we're doing this, because I always forget to close Steam, and then it just reminds me of these things. Okay. So if we go out to July, we've still got some decent open interest out here, right, which is good. Let's go to the stack view. This is the problem. We're going that far out, we're not going to get all of the wonderful strike prices that we would like to get, right? They're just going to put us at the 10s right now. When we get a little bit closer, then we'll go ahead and do that. So let's look. What did we say? It was like $10 is what the market was pricing in. So the market's really only pricing in a move to 245, really. 230 just seems too far into the money. I mean, $6 of intrinsic value. I don't think I want to mess around with any of that. Now the 240s are essentially going to be at the money here. Maybe I don't like that expiration. Let me start messing around with these expirations. Well, we got a few in here. What was that? 30th. Let's look at 7s. How lucky can you get, guys? Look at 7717. That's pretty good right there. I like that. 7717, but not a lot of action over here, right? 14th, of course, nothing. And then the 21st is where we're going to actually get something, right? All right, here's what we're going to do. How about we look at some diagonal action on here? Because I think this is lending itself to that. And why? Because we know from our earnings surprise, consolidated earnings surprise, that they don't, a couple days before, a couple days after, they don't really move a lot, right? So maybe the options market sort of overestimating the amount it's going to move here, right? Okay. Now, it does have a tendency to kind of trend, or it has at least the last couple of earnings reports, sort of trends in a direction. So we can take advantage of that by selling premium just in this sort of front week or front month even. I say front week, and then going long a little bit further out. Okay. So $10 puts us right near this 247 number. 247.50. All right. I'm just kind of eyeballing. You guys know what I do. Eyeball where there's open interest, just if anything's hinting. See, this 250 is just such a nice, convenient level, right? That's why there's a lot of people along at 250. The 245, maybe that's towards the end of the range too. That might be something to look at. Let's see the 245s. 245s. And I know there's more IV in other places, but that's never been a major sticking point of mine. I don't know if you guys notice. I rarely talk about it, partly because I don't want to overcomplicate everybody's life. But we can start getting into that kind of stuff in the future. Okay, So let's just say 245s. We're going to go ahead and duplicate this tab. Put you here, put you here. Now we got our... Are we back, guys? I saw a little thing about a disconnection. Lost ya? Everything looks good here. Looks good. Good. Still streaming? Okay. Sorry for a little hiccup, guys. Been having some issues at the yacht club. Let me tell you. Okay. Maybe we do look at June. Maybe a couple weeks is good enough. So these 245s over here in the front week. So this is only one day you're getting of 205, right? Whereas a couple weeks out, they're 360. You guys see that? Let me line this up proper. Of course, bar chart is being... There we go, 240s. So you guys could see 616, and this is the 62. Okay. So I was looking out at these 245s being 205. And then if we look basically 240s or 237.50, could do that too. That might make more sense. 237.50s, these are still, those are up there, right? Now, what are we gaining from something like this? Okay. What we're gaining is basically unlimited upside past 245 if the stock doesn't make that move in the first day, right? That's essentially what we're gaining here. And then if it does move that in the first day, like you guys saw before, you'll have to sell this to go ahead and cover that. But it would be okay. But this here is almost a $500 trade. So let me just parse this out for you guys. And again, we're exploring a couple of things, doing some math, seeing it. So if you were short the 245 call, midpoint there is 218. Going long the June 16th 237.50 is going to cost 665. So getting back 218, this is still a $447 trade. I feel like that's a lot of money. That's more money than we typically like to roll out on these things, right? I try and keep these ideas like 250 and under because I don't want people, lighting thousands of dollars on fire because you want to swing for the fences. Certainly not my agenda here. So anyway, but you would have the 447 at risk. So you add that to the 237.50. Oh, goodness. Okay, so 237.50. And what did I say? Plus the 447, I think it was. So now your break even becomes 241.97, which is pretty cool, right? So again, and Bill talked about this too, and I think I showed it in one of the spreads that we have going on. You do have the option of rolling it out. So you can go ahead and after this trade takes place, then as long as we're under this sort of 245 level, you don't get called away or anything, you can go ahead and again sell this 245, and then you could lower your overall risk there. Again, this is going to be a lot different price, and that's sort of a two-step kind of process, and something that we follow up with our GBU review. And we talked about it a little bit last week, which was the game plan, right? Okay, so there's that. And then the other option, like I said before, is, we don't get cute with the calendar part, and you just flat out end up doing, one of our regular sort of spread ideas where, I'm a big fan of the halvesy. I keep saying it. We just come down to this 242 level, 242.50. And then it's 665 minus the 455. Now you have 210 at risk. Okay? Difference in the strike prices here is $5 minus the 210 means you can make 290 and then divided by the 210, so 138% rate of return is what you could potentially get on this, right? So that's why in some cases, guys, it's absolutely beneficial to sell, this front week or even this front month and then go out further. I'm having problems specifically here with Broadcom putting this together for you guys, not because of the fundamental nature of how we've been seeing this thing move. I mean, this is perfect. But it's just the price. I don't want to come out here and show you guys like, oh, it's going to cost $1,500 to put on this thing, right? I mean, of course I could. This is just, a lot of this is educational. But I want to give you something you can actually use, right? So I think I'm going to avoid getting too far into this calendar or diagonal specifically on Broadcom. That doesn't mean you guys can't do it. Everybody's got different risk tolerance, and you guys feel free. I know a lot of you guys. Everybody's at different levels here, so I think if I were looking to put more money on and have more at risk, you could do that scenario. And even not going long, I mean, you guys, if you really want to do this, you could go long out to like July. And then you could keep on selling these calls kind of out of the money. You could sell that one, and then when that's over, then you can move up and sell the June one, and then when that's over, you can move up and sell your July one, right? You can keep on doing it. You can keep moving it every single time. And that's really a longer term kind of trade strategy, which is great. And yeah, Bill, you're talking about it. Trade maintenance, following up on it and constantly doing it. And really in the scope of what we do here, I think it's starting to push a little past what we're trying to get at, right? We're trying to find you some short-term trade ideas that you can go ahead and make, some quick moves on, right? So I know that was a very long way to get back to doing sort of the same thing here, right? So this is what we're going to do. Let's officially get you guys some credit spreads that we can look at, okay? So just going a couple of weeks out. Let's first look at, really, I mean, I think we can get out and we can go all the way out to 250. Still take in some decent premium. Past what the market is expecting it to move. And there's still plenty of juice out here. So selling the 250 call, this is the June 16th 250 call, you get 245. Simultaneously buying the 250 is going to cost you 193. So your net credit on this is going to be 52 cents. The difference in the strike prices is 250. So the amount you're going to have at risk is 198 on this trade for 26%. So I'm going to say bear credit is short the June 16th 250, 250, 250 call spread for 52 cent net credit. Okay? So there's that. Now let's look on the put side. Now the market is basically saying 225-ish, and that's the 50-day moving average. Very comfortable with that. 50, 163, so that's 45 cent net credit The amount of money you're going to have at risk is 250 minus that 45 cents, or 205. So this is good for a 21.9% rate of return. So this is the bull credit, is short the June 16th, 220, 217.50 put spread for a 45-cent net credit. Okay? All right. So we like that. Now, what if we really want to put, if we think Broadcom is going to end up reacting and moving a lot to earnings? Again, I'm a big fan of the AVGO. So using the 237.50 as the anchor, saying it's not going to go all the way here, but rather it does half of that move. Lower risk in terms of how much it has to move for you to make money. It's like whatever. Going along the 237.50 is 665, simultaneously shorting the 242.50. You're going to get back 455 of that, so 210 is going to be your net outlay on this one. And again, difference in the strike prices is $5 minus that 210 is 290 divided by 210. That was that number I was saying before. 138% is what you can get on this, and the thing doesn't have to move that much. I think that's a decent risk reward for going out a couple weeks in a stock that doesn't really move crazy on earnings, but does move a little bit. So let's say the bull debit is long the 237.50, 242.50 call spread for a 210 net debit. And now the bears are still going to use this 237.50. And then again, we can use, the market's looking at 227.50. But we can use the 232.50. That might not be that attractive. Let's do the math on it. I don't think this is that attractive. Let's see. 835 minus 590. Okay, so 245 is the amount of money you'd have at risk, and then the amount of money you can make is just 255. So you're not going to make as much, but you could still double up on this trade. So I'm going to say that the bull or the bear debit long 237.50. Let me do this. Bear debit is long June 16th, 237.50, 232.50 put spread for 245 net debit, right? Okay. What I think happens, tech overall, guys, has done very well in this market, okay? Something I want to show you guys, which I'm sure you've not finance.yahoo, you bums, Finviz. I'm sure you guys all have seen this. I like looking at the heat map. So let's just look at 3 month performance on the heat map. So the green is good, right? This is where areas of the market that are hot. I like looking at this because I go, oh, wow, I didn't even, that just snuck by me. Restaurants, yeah. Services and like lodging. Of course, Amazon, right? Everybody knows Amazon, Apple's, Google's, right? And then who are these? Semiconductor equipment and materials. Semiconductor specialized. On fire. Just absolutely in fuego. And tech in general has done very well. You can see that in the NASDAQ. NASDAQ don't care. NASDAQ's going to rally, and he's going to keep on rallying. So I'm definitely going to err on the side of being bullish here with Broadcom. And so I think in this case, even going a little bit aggressive with the debit spread is the way to go. Or Broadcom 236. I've got no problem with that, putting together a 237.50 and even saying that it goes the distance. Saying that it gets every bit of that 247.50. 665 minus 308 is 357. But in this case, what? We got 1,000 minus 357. We can make 180% on that. You see why I always end up retreating on these? I always end up retreating. Because 180% to get all the way to here, but I can get 140% just going here. And it just makes it, there's plenty of meat on the bone, I think. So I think the trade that pays here, trade that pays for me is the bull debit long, June 16th, 237.50, 242.50. For, what was it, 210? 210 net debit. That's what we're talking about there. Okay. So that's what I think. Again, you guys don't have to believe me. You can do whatever you like. But that's what I think is going to happen. Now, tomorrow what's going to happen? Well, heck, later today what's going to happen is I've got the good, the bad, and the ugly review. So I'll be covering a lot of stuff there. Tomorrow we've got our morning after review, which will be nice. Just wanted to check in here. Oh, guys, look at Palo Alto Networks. That's it. I'm not wearing pants the rest of the day. Oh, look at that. Fading it. 135.85. Oh, man. Please somebody tell that to get to 133. Ha ha. Fantastico. I hope this thing gets to 133, and I hope somebody pulled the trigger on those 135 puts. Oh, man. So good. But, yeah, Kurt, man, go ahead. Throw that out there. Throw stuff out there. Mr. Chumber threw some stuff out to me, too, that I looked at. I'm open, man. I'm open for suggestions. Throw them out there. Let's see. And, man, I'm happy on this Palo Alto intraday thing, which would be great. So, yeah, Kurt, go ahead. Post whatever you want to post. It's all good. Very excited about Palo Alto fading this a little bit. Very nice. You know, it helps to come back get a little back when they punch us in the face like that, right? And that's it, man. That's all I got. I got a lot of work to do today. Don't forget the morning after tomorrow, where hopefully we'll uncover a sweet trade just like this Palo Alto Networks. The follow-up trade, right? Something sweet like this that happens with Lulu. Or, oh, look at it still going. Come on. I just want to sit here and clap right now for Palo Alto Networks, giving some back. Get down to 133. Oh, wonderful. Okay. Lotto. Yeah, Lotto. Dr. Paul's always got to remind me of the Lotto. What do you guys think? Lotto, it breaks 150, right? That's got to be the Lotto. The Lotto's got to be breaking 150. Or 250, rather. I'm in different moods here. Loving that PNW fade, by the way. And Lotto is long 250 call. Absolutely, that's the Lotto ticket. No question. Long the 250. Because if the thing really spikes, it could go off to the races. You could even go, I was going to say you could go long the 245. Nah, I think long the 250. Long 250 call is Lotto. Or 115 rather. Okay, guys, that's what I got. We got lottos. We got fade opportunities on the follow-up. I am so excited about this Palo Alto thing. Keep on just tumbling. Just tumble. Get down to 133. If anybody, guys, you do have to watch, though. If it gets down to 133, watch carefully what happens. There is a likelihood of a bounce at 133 for sure. Because they'll likely defend this gap. If they don't defend the gap, it could be spectacular. Okay? So, Kurt, thanks for posting the eChat thing. I don't know even what eChat is, so somebody needs to explain all of this to me. And we'll go from there. All right, guys. So thanks so much for hanging out with me here, bearing with me on my failed audio. I will go back and fix this whole thing. Oh, and I totally forgot to record this thing for the other people. Oh, man, I'm going to have a bad, whatever. Anyway, all right, guys. I will talk to you mañana. Have a good one.